On this, the final trading session of the week here at the New York Stock Exchange, the markets again are on the upside. To talk about that and more, standing next to me, I have Peter Cardillo, Chief Market Economist for Rockwell Global. Sir, how are you today?
Fine, thank you.
Mr. Cardillo, I have to ask you first. The markets are still on the upside just like when they opened. However, that was in light of mostly weak economic data. We had consumer sentiment plunging to 76.8 in September, and we had retail sales rising less than expected, 0.2%, I believe. What's your take on why the markets are afloat, and what's your take on the market today?
You know, that's not the only problem today. Some of the headlines today were rather ugly. I mean, if you looked at some of the news that came out of the Middle East, you know, you have the Al-Qaeda saying that they want to begin renewing attacks here in the States, and of course, you know, the situation over in Geneva with the Secretary of State and the Russian representative basically trying to pan out a deal for the Syrian situation. And then, of course, you know, how you had the ugly economic news, and you would kind of think that the market would actually plunge. And another, not negative, but certainly negative for certain markets, is the fact that we had in the Nikkei press, Mr. Summers actually almost being confirmed, obviously not by President Obama, but by the Nikkei press, that he's going to be the next chairman of the Federal Reserve. And so we see a divergence between equities, which are going up in lieu of this negative news, and we see commodities that are coming down rather hard. In fact, gold prices are under severe pressure again. You know, there's an old saying on Wall Street that you buy them on Rosh Hashanah and you sell them on Yom Kippur. Well, tonight begins the Yom Kippur festivities for the Jewish brethren, and as a result of that, you would kind of think that we would have an ugly market, but yet the market is doing the reverse. And I kind of think that the reason for that is that whatever the Fed is going to say next week or do next week is probably already discounted. I think that they're going to stay on hold in lieu of the retail sales number today and some of the other geopolitical concerns that we have. But, you know, the market is already discounted. Perhaps a reduction of 10 to 15 billion in their monthly purchases, and I think that's the reason why the market is rallying.
Okay, let's touch base on something you mentioned a little bit earlier. We'll touch base on Syria. Yesterday, the markets were a little bit quiet regarding Syrian news. However, this morning, the reports were all over the place talking about how Secretary of State John Kerry went on to say that the surrender of chemical weapons by Syria is not enough. Now, that statement, if at all, will it affect the markets? How will it affect the markets? Your take on that?
Well, you know, right now, I think the fact that they're talking is a relief for the market. But again, one of my concerns out there, and I'm not turning negative, by the way, I'm still quite bullish. I think the market is going much higher. But one of my concerns, at least in the short term, is the fact that this diplomatic resolution might be implemented, but that doesn't mean it's going to be respected. And if that's the case, you know, the geopolitical concerns are going to be right on top of the of that wall of worries, and they could take some wind out of the market here in the short term. But again, I'm not going bearish. I'm still quite bullish on stocks, and I believe by the end of the year we will be trading higher.
And one more thing we'll touch on that you mentioned briefly. Focus shifting now to next week, the FOMC meeting. Everybody's going to be looking at that Tuesday and Wednesday. The question that everybody is trying to figure out is, will we see a cut in the recent bond purchases by the United States, or is it too early to say that?
Again, I'm going to say what I said a few moments ago. I think that they're going to stay on hold. Look, there's certainly a lot of evidence out there that points to the Fed beginning to reduce. Obviously, the consensus among Fed members is that they will. And so, you know, I'm in that minority camp that thinks that they won't. And I think they're going to hold until the end of the year. That's not to say that they're not going to do it this year. I just don't think they're going to do it next week. And the reason is what we spoke about a few moments ago. Retail sales, not all that hot, you know. Consumer sending, consumer confidence beginning to plunge, at least from the household perspective. And, of course, you know, last week's unemployment data, certainly nothing that would change the perspectives of the job markets, really adding on new jobs growth that would take the unemployment rate under 7% anytime soon. So I think if you factor in these geopolitical concerns, I think that there's evidence that the Fed is going to wait. Question is, you know, what will happen if they do announce a trimming of between 10 and 15 billion? Probably nothing, because it's already baked in the market. In fact, if you look at the yields, it does certainly indicate, at least this week's trading, that perhaps the yield effect has now peaked. And so, you know, whatever happens in terms of the Fed next week is probably going to be a non-event.